Project bank accounts, or PBAs for short, are a financial management tool designed to improve payment security and cash flow in the UK construction industry. By holding and distributing project funds through a dedicated bank account, PBAs aim to ensure timely payments to all parties involved in a construction project, thereby enhancing financial stability and trust within the industry. This video explores how PBAs work, their benefits, and their implementation within the UK construction sector. So how do PBAs work? A PBA is set up at the project inception, typically by the client or main contractor. This dedicated bank account is separate from the contractors' and subcontractors' regular business accounts and is solely for managing project payments. The PBA is under joint control of both the client and the main contractor. This joint control ensures transparency and mutual agreement on the disbursement of funds. The client deposits the agreed project funds into the PBA. These funds cover the entire value of the project or specific phases, ensuring that money is available when payment milestones are reached by the contractors. Payments are then made directly from the PBA to all parties involved in the project, including the main contractor, subcontractors, and suppliers. This direct payment system bypasses the traditional tiered payment structure, reducing the risk of delayed or non-payments. The PBA is regularly reconciled to ensure that the funds are appropriately allocated and that payments align with the work completed and certified by the project manager or quantity surveyor. Before we move on to the benefits of PBAs, why not check out our online learning platform we offer for formal CPD? We offer mini courses and tests on a wide range of QS topics. You also gain access to various commercial templates which can be used in your day-to-day job, in addition to our exclusive AI commercial assistant. Benefits of PBAs. Improved cash flow. By guaranteeing prompt payments, PBAs help maintain steady cash flow for contractors and subcontractors. This reliability allows them to manage their operations more effectively and reduces the risk of insolvency. PBAs minimise payment delays, a common issue in the construction industry, by ensuring that funds are readily available for distribution upon completion of agreed milestones. Enhanced transparency. The joint control and direct payment system foster greater transparency in financial transactions. All parties have visibility over the payment process, reducing disputes and encouraging trust. In the event of the main contractor's insolvency, funds in the PBAs are protected and can still be distributed to subcontractors and suppliers, safeguarding their interests. Compliance and confidence. PBAs ensure compliance with payment terms stipulated in contracts, enhancing confidence among contractors and subcontractors in their financial dealings with clients. Implementation in the UK construction industry. The use of PBAs has been endorsed by the UK government, particularly for public sector projects. Government initiatives and guidelines encourage the adoption of PBAs to promote fair payment practices. For instance, the UK Cabinet Office mandates the use of PBAs in central government projects exceeding £2 million. Project bank accounts represent a significant advancement in the UK construction industry's efforts to improve payment security and efficiency. By ensuring timely and transparent payments, PBAs contribute to a more stable and trustworthy business environment, benefiting all parties involved in construction projects. Their growing adoption, particularly in public sector projects, underscores their importance in fostering fair payment practices and enhancing the overall financial health of the industry. Metroun, a commercial hub for your business.